Welcome back. You're tuned into Chartbusters. Well, the market's a little bit subdued, but we're getting you a couple of managements which have reported a very, very strong set of numbers. And our next guest on the show is from Wonderla Holidays that reported a super set for Q4. The revenue is up nearly 70% on a year-on-year basis. The net profit as well came in at around 35 crores. We have Mr. Arun Chittalapilly, the Managing Director of Wonderla Holidays, who joins us on the show. Hi, Arun. Good morning. You know, Arun, when the markets opened today, I said one stock that's feeling wonderful is definitely Wonderla Holidays. Fabulous set of numbers, up close to around 5 to 6%. But the question is, how is FY24 looking? So let's focus on that. Give me two numbers. What is your ARPU likely to look like? What was it in the past quarter? Where is it headed? And also, if you could give us a sense in terms of your footfall expectations for FY24. I think you were talking about a 5 to 10% growth.
So, yeah, thank you for having me on the show. It's been a great year, as you guys already know, and very happy to report these set of numbers. And if you look at our ARPU for the last year, it has grown by almost 10 to 12% compared to the previous year. And this year, again, we are looking at an ARPU increase of roughly about 10 to 12%. This is for FY24. So that's also already been factored in. And footfalls, we are expecting a marginal growth of roughly between 5 to 10%.
All right, 5 to 10% footfall growth, will 10 to 12% ARPU growth for FY24 is what you're guiding for, which would be close to around 15 to 20% in terms of revenue growth. Just wanted to understand how would that then translate into the operational performance, because yours is an operating leverage heavy business. A 70% jump in your revenue in FY23 led to a 111% jump in your profitability, or rather in your EBITDA. So with a 5 to 10% footfall growth and 10 to 12% ARPU growth in FY24, what could your EBITDA jump by?
So it's hard to predict EBITDA for this coming year because we have some capex plans also. We have new projects coming in, and we have also capex coming in our existing products. We are in the process of refurbishing our existing offering, and also there is some investment that we are looking at in terms of digital transformation, some talent hires and things like that. So I mean, we are expecting to maintain the same margins. Maybe it will come down by a few points, but it's hard to put a number on the EBITDA and those kind of things right now. All I can say is this year we are not looking at a huge growth in footfalls compared to previous year, because we already seen a huge growth in footfall. So this year is like for us is a consolidation year in terms of how to improve our ARPU and our F&B offerings and sale and other sales, other revenues, things like that. So that will be the focus for this year, and also the new project.
Yeah, that exactly actually was. I had a follow up on that. You said you're looking at other avenues for revenue growth. So what else is it that you're looking at to drive footfalls and revenue? Because I mean, when we look at your business, you have 3 parks currently, a couple under construction. In those 3 parks, there are 2 ways you can get revenue. One, if people spend more at those parks, or second, more people enter that park. On both, you've given us a guidance that more people entering would be around 5 to 10%, and people spending more would be about 10 to 12%. How else do you drive revenue? I mean, you're looking at new avenues. What could they be, and what could the expense be for that?
Yeah, so I mean, so a couple of things. One is, I mean, like I said, we've been focusing heavily on events and other, out of ticket activities, like where we can do extra ticketing. So we have planned to do those kind of events. That is one, and a lot of moment marketing and those kind of initiatives which help us drive footfalls. The other thing I think we are looking at is whether we can improve our share of ad revenues that we get. We don't currently get much ad revenues, but because of growing footfalls, one of the things that we want to do is look at whether we can get ad revenues within our parks and collaborating with other parks. So these are experimental right now. So these are some of the things, but like I said earlier, our ARPU growth of 10 to 12% looks, I mean, we're putting it conservatively at that level. It could be even higher than that.
Okay, all right. Arun, the ticketing, non-ticketing, I think earlier, I think as of now it is 75-25%?
Correct.
And you were looking to take it, I think, to around 60-40. By when?
60-40 will happen only in about 3 to 4 years. We want to move it by at least, we will move it by about 5% we want to move it by about 5% every year.
Okay, all right. Arun, I had two-part question now because the street would like to know what is the growth from here on. So an update on 2 of your parks. I think you were waiting for an approval in your Chennai park. Could you tell us what is the status update out there? And also Odisha, you're setting up a unit over there. So what is the capex you're doing and when does that come on stream?
So the first park that we will be commissioning, which will be in FY25, will be the Odisha park, which is a capex of roughly about 120 to 130 crores. We have already invested about 20 crores there, and work is going on in full swing, and we have excellent support from the government of Odisha as well. So that's ongoing. The other project is Chennai, which was actually put on hold previously, but as we've come to know that our request for LBT waivers, which is the local body tax waiver for our project, which is a new project coming up, has been approved by the Tamil Nadu government. We don't have the details yet, but as of now, we are going ahead with it, with the project, and we hope to commence work there within the next month or so. So we are already gearing up for that, and that project should come on stream maybe 6 months after Odisha. So like maybe FY25 end or FY26 is what we are looking at.
FY26, FY27 is where you will get the benefits of these two new parks in your overall mix as well. Final question, you also had expansion planned in your Bangalore resort. What was the occupancy like there earlier? How much do you expand it by, and what can you target in this year?
So the resort has been doing exceedingly well. Our occupancy has grown, and right now we are at about 70% occupancy, which I think is a healthy occupancy for a weak quarter. And this year, during our summer, we were seeing a higher occupancy as well, between 80 and 90%. And so that gives us a lot of confidence. So we are planning to add some new items to the resort. We are in the process already. So we are looking at adding about 40-50 rooms there, and a convention center and few other entertainment options as well, in keeping with our, being part of a theme park experience. So some of those things will come on stream by the end of this year. And so we can see, we hope to do more in the resort business as well.
All right, Arun, wonderful. Always good speaking to you, and reminds us of our school excursions when we would go to all these amusement parks.
Maybe we should try one.
We should try one of them.
Sometime this year, we'll fix up with Arun and team and go and see. Numbers we understand, Arun, but we want to experience it as well.
There's one in Bangalore, there's one in Kochi, and there's one in Hyderabad. Which one do you think we should come for? And don't say all three, because we don't get so much leave.
So I would recommend coming to Bangalore so that we can, at least I can show you around the park and take you out to all the best rides in our park. So please do come to Bangalore and show you around, go for a roller coaster ride.
Lovely, lovely. Do that in a good quarter, because both of us, in terms of ARPU, will be very small contributors there. So maybe, we don't want to bring the average down that time. Arun, always a pleasure speaking with you. Thank you for joining in. Wish you good luck for FY24.
Okay, all right. Well, we made a plan, but for the time being, we need to come back to the markets. We'll slip into a short break. You come back, we'll continue our focus on just that.